One of the liquidity ratio is the defensive interval ratio. To calculate the defensive interval ratio, we have to divide the current assets of the company by daily operational expenses. The daily operational expenses will be varying throughout the year. So what we will do, we will try to get an average of the operational expenses. Before we calculate the defensive interval ratio, therefore, we need to calculate the daily operational expenses first. To calculate the daily operational expense, we have to take the total operational expenses of the year, which is possible by adding the cost of sales and the other operating expenses, and after that deducting the non-cash charges that has been made in the income statement. So we get the total operational expenses of the year. Then because we have 365 days in a year, we will divide the total operational expense of the year by 365. Let us calculate the daily operational expense first for the year 2018. Now we have to find the cost of sales, other operating expenses, and non-cash charges from different financial statements. Cost of sales and other operating expenses are possible to find from the income statement. As you can see, cost of sales is clearly available here, and also the other operating costs and expenses are there in the income statement. But how can we find the non-cash charges? Well, we can identify the non-cash charges from the income statement, but to me, it is easier to get it from the cash flow statement, because cash flow statement clearly adjusts the net income by the non-cash charges. You will see that the depreciation and amortization, share-based compensation expense, non-cash facility closing and recognition cost, impairment of goodwill and long-lived assets, write-up of financial costs, other operating income, equity in earnings, loss of unconsolidated affiliate, deferred income tax, and some other items. All these are actually non-cash items. So if you add all these things, then you will ultimately get the non-cash charges for the year. So we can calculate these things very easily. Let us select the cell for 2018. Starting with the equal sign, let us go to the worksheet where we can find the cost of sales and other operating expenses, and then we will go to the worksheet where we will get the non-cash charges. Bracket starts, then IS for cost of sales plus the total operating expenses, minus sum all the non-cash charges from the cash flow statement, then bracket close and another bracket close, divided by the number of days in a year, return. So we have got the daily operational expenses. Actually, it is an average figure. If we get that, now it is very easy. Equal sign, go to the balance sheet to get the current asset, divided by, again come back to this one. So just click cell containing the 2018 average daily operational expense and then press enter. We have got that 43.2 is the defensive interval ratio. Actually, this is expressed as number of days. We will have separate interpretation. So to get the results of 2017, what we can do, we can simply copy the formula in the adjacent cell, and we will get it for the year 2017, because in all the worksheets 2017 amounts are just in the next column of that of the 2018 amounts. So we can see that the defensive interval ratio was 49.59 in the year 2017, and it is 43.20 in 2018. Thank you very much for being with me.